Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's daily crude steel output rose 2.4% in June from a month earlier, official data showed on Thursday, setting a second straight monthly record as mills cranked up production on robust construction activity and a pickup in manufacturing. Output in the world's top steel producer hit 91.58 million tons last month, or 3.05 million tons a day, data from the National Bureau of Statistics showed. That was up on a daily average of 2.98 million tons in May. Monthly output in May reached 92.27 tons, but the month has an extra day compared with June. June's output was up 4.5% from a year ago.
Moving on to the top news in the energy sector.
Saudi Arabia's crude exports fell to 6.02 million barrels per day in May, the lowest level since October 2010, official data showed on Thursday. Crude exports from the world's largest oil exporter dropped 41.2% from 10.237 million barrels of oil per day in April, according to data from the Joint Organizations Data Initiative. Benchmark Brent crude futures prices have dived more than 34% this year as the coronavirus crisis crushed fuel demand. In an effort to offset the slump in demand, the Organization of the Petroleum Exporting Countries and its allies, a group known as OPEC+, began cutting output in May by a record 9.7 million barrels per day, equating to 10% of global supply. OPEC and allies such as Russia agreed on Wednesday to ease record supply curbs from August.
We will now look at the top news in the agricultural sector.
China booked deals to buy 522,000 tons of soybeans, the U.S. Agriculture Department said on Thursday, the latest in a string of purchases by the world's top buyer of U.S. agricultural products. Another 351,000 tons of soybeans were sold to buyers in unknown destinations, the USDA said. Traders and analysts said those soybeans also were likely headed to China. In a separate report on Thursday, the USDA said that export sales of corn to China totaled 1.37 million tons in the week ended July 9, the biggest weekly total on record. China also bought 323,739 tons of wheat that week, its biggest weekly total since March.
Next we have agricultural price moves.
Chicago wheat futures edged lower on Thursday but held close to a near three-month high struck a day earlier as talk of Chinese purchases and concern about Northern Hemisphere harvests supported prices. Corn and soybeans added to gains from the previous session on signs of renewed Chinese demand. The most active wheat futures on the Chicago Board of Trade were down 0.5% at $5.547 minus 3/4 a bushel. They had climbed more than 4% on Wednesday when prices hit their highest since April 23. CBOT soybean futures were up 0.5% at $8.87 minus 1/4 a bushel, while corn futures rose 1.0% to $3.37 minus 1/4 a bushel.
We will now take a look at energy price moves.
Oil prices steadied on Thursday, weighed down by an agreement from OPEC+ to ease record supply curbs but buoyed by tightening global inventories as economic activity picks up. Brent crude fell 4 cents to $43.75 a barrel by 15:10 GMT. West Texas Intermediate crude dropped 11 cents to $41.09 a barrel. Both benchmarks rose 2% on Wednesday following a sharp drawdown in U.S. crude inventories. The Organization of the Petroleum Exporting Countries and its allies, known as OPEC+, agreed on Wednesday to scale back oil production cuts from August. They will reduce their cuts to 7.7 million barrels per day through December from the 9.7 million barrels of oil per day cuts in place since May.
Moving on to metal price moves.
Copper prices rose back towards two-year highs on Thursday, after data showed a rise in Chinese factory output, though the numbers also pointed to trouble ahead for the world's biggest metals consumer. Benchmark copper on the London Metal Exchange was up 0.8% at $6,435 a ton at 16:01 GMT, near Monday's peak of $6,633. The metal used in power and construction has rallied from a low of $4,371 in March, when the new coronavirus spread worldwide, and many analysts think prices are too high.
Finally, we have the most recent news on the financial market.
The safe haven US dollar fell modestly in morning trading on Thursday after domestic retail sales data for June came in better than expected, though the move was limited by jobless claims and a drop in US equities. Retail sales in June increased for the second consecutive month, according to a report from the Commerce Department. The US dollar index, which measures the currency against a basket of 6 rivals, was last down 0.07% to 95.940. A separate report from the Labor Department on Thursday showed 1.3 million people filed for state unemployment benefits during the week ending July 11, slightly down from 1.31 million in the prior period. The report nevertheless showed that a resurgence in new COVID-19 cases was chipping at the budding recovery. The 3 major U.S. stock indexes all fell as a result, with the S&P 500 index last down 0.64%. The euro was little moved by the outcome of the European Central Bank meeting, last trading up 0.10% to $1.142. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.